The COVID pandemic and an increased focus on environmental, social and governance issues has changed the fund and financial landscape. The funds industry has reacted positively to this changing environment and is helping to maintain a stable economy. International law firm Reed Smith is partnering closely with its clients to achieve their goals and objectives.
Like these sky-high views over London, the outlook for funds focused on alternative investments continues to rise. The industry has soared in the past decade, weathering a financial crisis, Brexit and the pandemic. In particular, fund finance has seen dramatic growth, and Helios, with a range of funds totalling more than $3 billion, is one of the private equity funds embracing the benefits of fund finance.
Having access to that additional capital means that if you find that one of your portfolio companies is struggling and it's sort of likely to be a short-term crisis, you have capital readily available.
Developing and launching a fund requires experienced fund managers, close investor relationships and market-leading legal advisors. Helios works closely with market-leading international law firm Reed Smith to put in place its fund's finance transactions. Leon Stephenson co-heads a fund's finance team of more than 40 lawyers in Europe and the US, advising clients how best to structure and implement financing at the fund level.
What funds finance has been able to do is to provide liquidity to businesses that are very viable, that are fundamentally very strong, but have been put on hold because of the pandemic. And if you can get them through this tough period and get them out to the other side, then they can flourish.
PANOS KATSAMBAS serves as the global co-lead of Reed Smith's financial industry group and says their approach helps clients across the entire life cycle of alternative investment funds.
If you look at us globally, it's a team that is broken down and does a whole range of activities for funds from, as I said, from formation, financing, transactional, and disputes. So trying to capture the whole life cycle and the whole spectrum of economic activity that the funds perform.
More responsible investing is one significant trend to emerge in the past few years, as investors put pressure on funds to generate positive social and environmental benefits along with financial gains. Reed Smith recently worked on one of the largest ESG-focused funds finance facilities in partnership with NatWest Markets and the investment firm Carlyle. A €2.3 billion credit facility was formed to support Carlyle's goals on climate and board diversity.
The world is changing. Historically, people have looked very much at the city and financial institutions as a money-generating machine. There's been a lot of focus on margin and profit, but now funds are very much looking towards environmental, social and governance purposes, trying to invest in a social impact way, and also to look at a longer-term view of investment.
There's an increasing need for all lenders, including banks, to be transparent on responsible lending. Rabobank, working closely with Reed Smith on strategic private debt fund solutions and market-leading ESG fund finance transactions, has been at the forefront of this.
ESG for us is very important. It's also not something that comes up overnight. We've already been 10-15 years, we've been rating our client base on ESG metrics. So we've got lots of data, lots of experience with that. But what you really see is that the level of conversation with customers on this topic is growing.
We have to look at the industry as a whole, understand the value it provides and the good that it does. And the key takeaway is, projecting where this industry will be in 10, 20, 30 years from now.
The shift towards greater sustainability is not only good for the planet, but for the future of funds and fund finance.